right now, what I'm hearing, let's talk about real estate, right? Because that's your forte. I was reading a report from CoreLogic that evaluated 392 regional markets, and they found that 98 of them had a 50% chance of real estate prices coming down. Okay. Now, only 98 of them had a chance of coming down. We live in Austin. They categorized Austin as having a very low risk. And they said low risk of prices coming down. I've got access to the MLS. I'm seeing nothing but price decreases. The thing about, appraisals and real estate prices, it's all lagging indicators. I'm telling you right now, prices are coming down right now as we speak. 3 months ago, 4 months ago, the home that you have, your investment property, it was worth more. It is now not worth as much. I promise you that. Prices have come down. So that whole notion of will we see real estate prices actually regress? Yes, we're seeing it right now. There's no question. And I think the further you get out of the three biggest components of real estate, which number one is location, number two is location, and number three is location. You had so many buyers that started to look outside of their zones, their preferred zones, because of money and because of lack of inventory, and they just got tired of it. And I think this is absolutely flipped to a buyer's market. Sellers are panicking, and it's I hate to say it, but the flippers, the quick fix and flippers that were throwing these spit shines on these homes, these single family homes, they're screwed because most likely they're over levered and they're actually driving the prices up.
Yeah. So, a lot to unpack there, right? Where to begin? Well, one, let's keep in mind the supply demand is still in favor of demand. Meaning it's still a seller's market. It is changing, absolutely, but it is still a seller's market. A lot of the homes that you're seeing remain on the market and have to take price cuts are ones that are older. They need some work. They're not the most ideal layouts. They have weird, wonky, locations in the neighborhood. They're anything that would quickly sell before as a shack or not a prime piece of property is definitely going to have to take price cuts right now. We're also seeing some price cuts in the affordable market. Naturally, that's where the higher interest rates had the most impact, right? The entry-level buyers pretty much dried up 20 to 30%, give or take, okay? The price of owning a home per month has gone up 20% due to the interest rates. You're beginning to see some of the more luxury market have to take price cuts of roughly 10%, give or take. Again, these are all off highs, so they're still really high prices. But what is really concerning me is that builders have said, hey, buyers are slowing down. We're seeing slower foot traffic, no doubt about that. I'm seeing right now, as of June of this year, Austin has a 25% of homes are seeing price drops. Right now, said another way, 75% are not. So the majority are still not seeing price drops. You are right, a quarter of them are, and it's increasing. So builders are saying, okay, pause. Homes that we don't have to finish that are, not even at framing yet, we're just going to hold off. So the supply will get, I think, a slight bump. And we're going to see as we turn through this, the supply demand ratio is even going to be worse than it was pre all this activity. And that is really concerning. Go ahead.
So one of the things that you just mentioned about 75% of the homes not having a price reduction, what you are missing there is they are negotiating a lower price than what's on the list price. So you're not going to see that information for another 30 to 60 days on homes. So yeah, they may not absolutely be officially taking price reductions, but they're taking low ball offers. And I'm definitely seeing
this is price versus list, right? So you're right. So there's a 1 month lag, and we will see here in the next week if that's gone up from a quarter or down. And we'll see it. You're right. If it's 40%, that is a troubling trend. Absolutely.
I'm seeing it. I mean, I check the MLS routinely. I love to see the look. We got crazy here. I don't think an environment where you've got 10 offers on a single piece of single family housing in this competitive situation is a normal environment. It's not. You know, one of the things I really have learned a lot studying the Kaya material is mean reversion, or, you know, these crowded trades. So anytime you see these markets get out of whack, they tend to correct themselves, you know, and some of them take a little longer. Real estate, I've said it before, it's an inelastic trade. And so supply meeting demand takes a little bit longer, but we are heading that way. We are absolutely heading that way. And what's critical, in my opinion, is days on market. How long are these homes sitting? And I think, especially for a lot of these folks who bought a investment property, not to cash flow, but simply to make a quick buck, that trade, my friend, is over.
Yeah. So, and on that note, right? So if you compare a year ago this time, which was probably the hottest time in Austin per se, 7 to 8 days on market, just ridiculous, right? Now, as we came out of it, before this all happened, towards the end of last year, we were around 30, 25 days on market. That was kind of the average, which is somewhat of a aggressive market. Right now, we're at 28 days on market as of June, end of June. Okay. Now, again, it's still, that is kind of balanced. We are seeing trends up to the right on supply. Price per square foot, it looks to be around 365. So that came down from 390. So that's pretty straightforward. And we know for a fact that foot traffic is low, or it has come down in the new home construction. And so that is absolutely a trend. And I think you're absolutely right. When it stops, we don't know, right? What I will tell you from my connections in the builder community, they are absolutely now pivoting to build to rent communities, right? And I think what's going to happen, and this is what I'm saying, as they begin to do that, and they love the ease of transaction. And by the way, there's $85 billion allocated to that community space. Only 15 billion has been deployed. There's $70 billion still remaining to go out to these communities. When this turns, builders will stop building for the primary home buyer. And as we turn back around into a productive economy, I think buyers are going to have less supply than when we first got into the situation.
I don't agree with you at all there. I think we've got plenty of supply coming to the market, and builders are now cutting the amount of homes that they're releasing in phases. They're going to sit on that land for quite some time and let this inventory, if they're smart, they cut it back and they shut down those phases, and they start taking, that's one side that can actually control inventory. So if the builders can do that, here's the thing. These builders are in, they're on the outskirts of phenomenal MSAs, right? Like, we're here in Austin. You've either got folks who are, they're on the outskirts of the MSA. That's a fact. Yeah. And the thing about the outskirts of the MSA is you got plenty of land. You've got all the land you want. So with all the land you want, you can develop as much as you want. They should be like OPEC and just cut supply, and
they are.
Let the demand start to, actually catch up to supply and limit that amount of supply that comes to market. They've got to do it.
And it's a valid point. And again, it's not as easy as saying that they're all doing it. Ones that are publicly traded, right? D.R. Horton, Lennar, they're the ones that have to meet deliverables and quotas. So they're going to keep building. And I think that's where we're going to see that switch, where they sell to the BTR space, still hitting their quotas. Now, who's going to slow down? It's the ones that are private, the ones that are not on the stock market. They can do that and maintain their cash balances. I will also tell you that I've been told is that a lot of the home builders, and by the way, 85% of all the lot development happens from home builders themselves. They buy their own land, do their own self-dev. That's what got them in trouble in the 08 crash. they've been told by their corporate headquarters to stop buying land, no more land banking, no more self-dev. You're only going to be buying lots from developers, right? Because they're going to de-risk their model. So the problem is there's not many of them out there. So they're going to slow down on their land purchasing, which is good for land buyers if you're a developer. It's bad for land sellers. And so I think you're right. They're absolutely going to pull back on supply. There is a lot permitted for the future. The question is, when do they actually start forming those foundations in the frames, right? And I think a lot of them are starting to really slow down and pull back. And that's what
great.
I'm saying.
And they should. They should.
Yeah, right.
I completely, I think.